I think the IMF is definitely scared of Bitcoin because they are a fiat organization. For those people that don't know, they have their own shitcoin. It's called the
SDR.
SDR, Strategic Drawing Rights, which means they can just kind of print their own money out of thin air too. But with Bitcoin, they're irrelevant, or they need to adopt Bitcoin. It's their choice. Either you adapt or you die. But I think there's another darker angle here, which is they're basically a loan shark. Their job is to lend money in perpetuity to countries like El Salvador and, developing places around the world. And this kind of puts them out of a job. So I think they had to fight for that, or they wanted to save face, because remember, they made a big stink about all the Bitcoin adoption in El Salvador.
Something massive is unfolding behind the scenes, and it's no coincidence that Bitcoin and the entire crypto market are taking a hit. Samson has revealed a shocking truth. The financial elites are in full panic mode. Why? Because Bitcoin threatens to dismantle their empire of control, and they are pulling out all the stops to crush it before it's too late. At the heart of this attack is the International Monetary Fund, a powerhouse that thrives on fiat currency manipulation. The IMF's special drawing rights allow them to create money out of thin air, keeping nations trapped in a never-ending cycle of debt. But Bitcoin flips this system on its head. It's decentralized, immune to manipulation, and restores power to the people. As Bitcoin adoption grows, the IMF's relevance and influence over global economies diminish, and their ability to control money is fading. That's why the IMF fought El Salvador's Bitcoin move so aggressively, first condemning it, then demanding policy changes. But here's where it gets wild. The current downturn in the crypto market isn't just natural volatility, it's a coordinated attack. Through regulation threats, market manipulation, and media-driven fear, the financial elites are trying to shake confidence and push people away before Bitcoin can fully replace their outdated system. The big question is, will they succeed?
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
What do you think were the motivations behind the IMF asking for those concessions from El Salvador? Are they scared of Bitcoin, Samson?
I think the IMF is definitely scared of Bitcoin because they are a fiat organization. For those people that don't know, they have their own shitcoin. It's called the SDR, Strategic Drawing Rights, which means they can just kind of print their own money out of thin air too. But with Bitcoin, they're irrelevant, or they need to adopt Bitcoin. It's their choice. Either you adapt or you die. But I think there's another darker angle here, which is they're basically a loan shark. Their job is to lend money in perpetuity to countries like El Salvador and, developing places around the world. And this kind of puts them out of a job. So I think they had to fight for that, or they wanted to save face, because remember, they made a big stink about all the Bitcoin adoption in El Salvador, that, you're going to fail, it's dangerous and whatnot. And when they're wrong and they're incorrect and the metrics prove them incorrect, vastly incorrect, I think they need something to save face. So maybe they insisted on these concessions just so they can say, yes, we got something. The whole way that government works right now is very flawed. And I think about this a lot because I work on a game set in the future. So I'm trying to think, how does government work in the future? And there are differing schools of thought. Some Bitcoiners think anarchy, and it's just free for all. I think you still need some structure in place, because there will be bad people that do bad things, and you need to be able to deal with that somehow. And I think there will still be a need for relationships with other groups, like diplomacy. So I think there is some role for government, very scaled back, very administrative, not prescriptive in many ways, and based off of some sort of foundational codex of laws that's far simplified, and mirroring a bit of Bitcoin. So consensus-based rules, where to do something, you need a supermajority to consent to it. So there is no war, no emergency act, no martial law able to be done without active consent of people. So that's probably somewhere we go, but definitely Bitcoin will change that relationship, because they can't print money, they can't take your money, so they just shrink naturally. And I think this is a good thing, because most of the problems we have today is the government is trying to do everything. It starts out slowly, but as you give people free stuff, they want more free stuff. And it just spirals out of control, where you have some of those things uncovered by the Department of Government Efficiency, which is the Treasury was just paying bills indiscriminately to terrorists too. So it just becomes a big machine that lives off of its own bureaucracy. The Aqua side, the biggest challenge for us is we're trying to build it non-custodially, because I don't think you can make a custodial wallet that can scale to planet scale, and most importantly onboard the billions of people that cannot access the financial system. So it has to be non-custodial. If you're trying to get licenses everywhere, until there's a massive sea change and everything is deregulated, it's just too slow, costly, and burdensome to do that. So if you want to build it non-custodially, you have a new set of challenges, which is delivering a Venmo-like experience without having custody. And that's actually very hard to do, and it slowed us down. But I think we're almost there. So we do a lot of interesting cryptography and tricks in there to make the swap system and everything seamless. So it's like PayPal or Venmo. It just works, but it's all non-custodial. So if a transaction, a swap fails, it just auto refunds back to your wallet. And that took us a lot of time to get right. We're trying to implement things like a Lightning address, but non-custodially too. So there's a lot of thinking that we have to put into how we do these things. But that was the biggest challenge for us. And also we got a massive influx of users, which we didn't expect. And that kind of made it more challenging we had to bring on more support people, and it slowed down dev as well. On the nation state side, I would say the challenge was we had the FTX fraud and blow up. That slowed us down a bit. There was a number of countries we had meetings planned with, and because of that, Bitcoin seemed to be the pariah again, and they didn't want anything to do with us or Jan3 or Bitcoin, even though it's FTX and it's because they use FTT as collateral. But now that we're back, it's much easier, and especially with the talk of the strategic reserve in the US, that changes things a lot. So the ETFs changed the conversation. That made it easier. The Trump admin coming into power and formulating this path to a reserve has made it easier yet again for us. So tailwinds now. We actually use a trick. We're using Liquid as the base layer.
Okay.
And we're using bolts to do swaps to Lightning. So
oh, interesting.
It's not really a Lightning wallet. And a lot of hardcore Bitcoiners were saying, that's not a Lightning wallet. We never said it was a Lightning wallet.
But does it matter if it does the same thing?
Well, to some people it matters. So your choice is right now a custodial wallet where maybe you KYC'd, maybe you didn't. But if you didn't KYC, then you actually have limits. And you have risk of, losing your funds somehow. If it's a non-custodial wallet, like Phoenix or whatever, you actually have to do a lot more, and there are costs. Like opening up a channel, rebalancing, those are all touching the main chain, right? So people think it's cheap. They say, well, I'm using Phoenix and I can pay 1 sat, but you actually paid, $4 or $8 when it was expensive to open the channel at that time. But if you have Liquid as this stable middle layer, and Liquid's been around for 8-9 years now, very reliable, rock solid. Blockstream, we launched that when I was there.
According to Samson Mow, Bitcoin is not just an alternative currency, it's a direct threat to the IMF's fiat-based control system. As decentralized finance gains momentum, the IMF's role as a global lender is beginning to crumble. Mow argues that governments will eventually have no choice but to adapt to this new era. Rather than exercising iron-fisted control, they'll have to shift to more administrative roles, acting as facilitators instead of enforcers. This shift could pave the way for a future where laws are no longer dictated by centralized powers, but instead operate on a transparent, consensus-driven system, much like Bitcoin's foundations. However, Mow acknowledges the significant challenges ahead, especially in creating a non-custodial wallet that scales globally while preserving true user autonomy. Unlike traditional banks and centralized exchanges that control your funds, his vision is to offer a seamless, self-sovereign experience without sacrificing usability. The battle for financial freedom is intensifying, and the IMF is running out of options. Will they fight to maintain control, or is Bitcoin's inevitable rise too powerful to stop? The world is watching, and the clock is ticking.
Why do you guys decide to use Liquid?
I think Liquid is a great technology, and it was always needed because it's a way to scale Bitcoin with sidechains. So Liquid is anchored to Bitcoin. There can only be potentially 21 million coins in Liquid because you have to peg them into the Liquid network. But it gives you that confidentiality of confidential transactions, and you can unblind transactions if you need to unblind it. But this is actually a very important thing, not just for Lightning privacy, but for stablecoin privacy too. So my friend Raoul was telling me, it's actually dangerous to use stablecoins in Latin America, the current ones like Tron and on Ethereum and Tron, because those are account-based systems. Liquid is UTXO based. It's a fork of Bitcoin, so it's 99% the same code, battle tested as Bitcoin. But with the confidentiality, when I send you Tether on Liquid, you can't see how much Tether I have. Whereas if you're using Tron, you send me that, let's say my cousin's a gangster. He'll say like, yeah, who's that guy? And how much Tether does he have? And then he goes and robs you or tells someone else to go rob you. And that's a real danger, I think, that has not really been fully crystallized in people's understanding yet. But I think they will understand. But above that, Liquid transactions are super cheap now. They're about 3 cents. There was a big upgrade to the network as part of Project Tsunami to make everything faster and cheaper. And now Liquid is probably the cheapest way to transact stablecoins in LATAM in the most reliable fashion. Back to the point, what do we have? We have MicroStrategy buying non-stop. We have ETFs, which are a doorway to legacy fiat money. If you go back to all the previous bull runs, where we get bogged down is the exchanges, because that's the touch point, right? That's how you convert fiat into Bitcoin. And if you remember back in the old bull runs, it was like Kraken's backlog for KYCing people was 3 months long. Coinbase, same thing. That's the bottleneck, because to comply as an exchange, you have to KYC everyone, and you don't keep 1,000-person KYC team, right? You have to keep a team that you can feed, and you can't scale it up that quickly. So that's kind of where it tapers off. But with the ETFs, there is no bottleneck anymore. Central banks can buy ETFs. So any demand for Bitcoin can now be satiated without any problem whatsoever. And that is really big. That's why actually I thought 2024 was going to be the year we hit 1 million, because I don't think people fully understand how big that is. Central banks can buy ETFs. There is no barrier for fiat money entering Bitcoin. But I think this year we'll hit it, since we missed last year. But you have MicroStrategy, you have ETFs, you have the removal of the barrier, you have nation states, and what else? There's just so much going on, like real adoption of Bitcoin. So I just can't see it not hitting 1 million this year. And the other thing is, you see a lot of people predicting prices, right? They like to be cautious and realistic and say, yeah, it can get to 150. It can get to 200. It can get to 250. Because I think they want to sound reasonable. Nobody wants to be the crazy guy saying it's going to 10x, like me. They want to be, I'm a serious person with realistic projections. But Bitcoin is not a realistic thing. It's a zero-sum game. Either you're going to use Bitcoin or you're going to starve. So it's all or none. And when you get to different levels, like when you get to 100K, it's different, right? When you get to 200K, the world again looks very, very different. Just close your eyes and imagine, what does the world look like when Bitcoin is at 500K? That's you're reaching half of gold's market cap at that point. That will demonetize gold if it doesn't get demonetized earlier, because there's talk of the US selling gold to buy Bitcoin to fund their reserves, because that would take out their enemies who have been accumulating gold for the last decade. But disregard that. Bitcoin is sitting at 500K. We are the second largest asset now, behind gold. It's a very different landscape.
Samson Mow and his team made a strategic move by deploying Liquid, a Bitcoin-anchored sidechain technology designed to scale Bitcoin while maintaining privacy. Unlike traditional blockchains that expose transaction details, Liquid's private transactions and unblinding features set it apart, especially in regions like Latin America, where public transaction data could put stablecoin users at significant risk. But this is just the beginning. Mow also addressed the huge impact of Bitcoin ETFs, explaining how they eliminate barriers for central banks to buy Bitcoin, which opens the floodgates for traditional fiat money to flow into the crypto market, fundamentally shifting global financial power dynamic. As for Bitcoin's price trajectory, Mow doesn't believe in conservative predictions. According to him, Bitcoin is a zero-sum game. It either wins completely or it doesn't. If Bitcoin hits $500,000, the world will undergo a massive transformation, with people demanding their salaries in Bitcoin, accelerating mainstream adoption. Meanwhile, the recent market drop has hit short-term holders the hardest, with $2.16 billion in realized losses, while new investors felt the sting the most. Long-term holders, however, remained unshaken. Mow also emphasized that Bitcoin's volatility isn't a flaw, it's a feature. These rapid price swings shake out weak hands while rewarding those with long-term conviction. As Bitcoin ETFs gain traction and central banks quietly accumulate Bitcoin, the financial system is slowly approaching an inevitable tipping point. Will Bitcoin emerge as the ultimate store of value, or will the establishment find new ways to suppress it? One thing is certain, this battle is far from over.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.